and welcome. You're watching Market Cafe today with me, Snehi Shah, and with me is Ankita Saxena. Now, this is a show where we take you through all the global stories that you should be keeping on your radar. We tell you about everything interesting that's happening around the world in terms of markets or otherwise, and we will also take you through all the stocks that you should be keeping on your radar this Friday morning. So, Ankita, take us through what the global cues look like. What's the global handover coming in? Now, the European Central Bank has also gone up and, followed the Fed and increased their policy rates by 25 bips. So, tell us what's happening globally.
That's correct. That was something that was already penciled in. But in the US, we did see some profit booking that came in yesterday after 13 streaks of, winning streaks. And we did see the markets in the red in the Wall Street because there was some profit taking, and also the treasury yields inched up higher. Now let's look at how the markets fared. The Dow Jones Industrial Average finally ran out of steam as investors cashed in following a historic streak of 13 straight days of gain. Now, the index fell 237 points, or more than 0.5%, dragged low by shares of Honeywell. Now a pop in the 10-year treasury yield. The treasury yield is back, above 4% mark. That didn't help the sentiment either. Now remember, the Wall Street, the Fed had raised the interest rates by 25 basis points, and that always has a bearing on the treasury yields. Treasury yields always inch up if the rates go higher, and that is weighing down the markets now. Now, if it had gained 14. We saw 14 days of gain coming on Thursday. The index would have actually, tried its record-winning streak going way back to 1897, but that did not really happen. The S&P 500 was lower by more than 0.5%, and at one point during the day, the broader index actually topped the key 4,600 levels for the first time since March 2022. Now, meanwhile, the Nasdaq Composite slid 0.5% as investors took some profit in the key tech shares like Microsoft and Apple. Meta platform shares popped 4.4% on better than expected results and strong, guidance coming in there. The company's numbers were boosted by a rebound in the ad revenues, and that is what really gave a boost to the Meta stocks. And in the latest GDP reading that showed a rise of 2.4% in the second quarter, which was actually better than expected, of 2% increase expected by the Dow Jones. Now, the report also suggested that the price pressures are finally easing. So a good state of the economy in the US, and that is really what the investors are looking forward to. The ECB also raised the interest rate hikes by 25 basis points, now which was largely penciled in by the market, and the market bucked the Wall Street trend by ending the day higher because it was largely penciled in, like I mentioned. Now the market is also apparently expecting that the ECB will pause the interest rates post the month of September, and that was the exuberance that really gave a boost to the European markets. The Pan-European Stock 600 closed up 1.4%, DAX was up 1.7%, and CSE was up more than 2% in trade. So positive handover coming in from Europe, but the Wall Street ending the day in the red. Snehi.
Absolutely, Ankita. That's the global cues on the equity front. Let me also take you through what oil did then. And oil prices fell in early Asian trade on Friday as demand concerns weighed against strong economic data. Brent crude fell about 59 cents, or 0.7% to the $83.7 a barrel mark, but was on track for a weekly gain of the 5% increase that was coming in for Brent crude. But on the other hand, you had WTI crude that also fell to the 79.7 mark, close to those $80 whereabouts, but a little under that. That was on per barrel mark, and it was on track for a 5.2 weekly increase anyway. Now, oil rose last session as fears of a global economic slowdown were eased by strong earnings report and the better than expected US economic data. Now, the recent interest rate increases from global central banks that are seeking to tame the stubborn inflation have raised questions about the long-term demand for oil. So we'll see how that pans out for oil. Oil right now trading with slight bit of a cut this morning, Ankita.
That's right, Snehi. Then let's quickly go across and see what are the events that we need to keep track of. First up is Pyramid Enterprises that will be considering a buyback. And RVNL is opening up for offer for sale, and retailers can apply as of today. And on the IPO front, it is the last day to subscribe for Yatharth Hospital's IPO. So a lot of events to watch out for, Snehi, in today's trading session.
Absolutely. And with that, let's also look at all the important global stories that we're tracking for you this morning. And the US economy grew 2.4% in the second quarter of 2023 as per the latest data, followed a 2% growth in the Jan to March period. Now, this comes on the back of strong consumer spending as well as government spending. At the same time, just last night, the Federal Reserve increased interest rates by 25 basis points. That was the night before. This was the 11th rate hike in its last 12 meetings, taking the benchmark interest rate to the 5.25 to 5.55% band. In his speech, Fed Chairman Jerome Powell hinted at another rate hike in the upcoming September meeting amid the central bank's battle against inflation. Here's what market expert Joff Dennis shares he had to say on these macro cues.
What's going on here is that I think the market is a little puzzled by what the Fed did, not what they did, but what they said. They've left everything very, very open. They would have liked a clearer jump, I think, on what could happen in September. But come what may, we are at or close to the peak in interest rates. Second point is that the economy continues to look really good as far as we're concerned, as far as I'm concerned, with a better than expected GDP number. So the chance of a soft landing here look better and better almost by the day as inflation's fallen sharply and it looks like we're near the peak in interest rates. And I think this is what's driving above all the improvement in risk equities over the last several weeks, not just, frankly, over the last few days.
All right, moving on then. ECB has also raised its benchmark interest rate by 25 basis points and shifted to a more neutral data-dependent stance. Now, this is the 9th time in a row that the central bank has lifted interest rates in order to rein in on stubborn inflation. Now, ECB President Christine Lagarde has also painted a gloomy picture on the economic front. Now, she said that the economic and inflation outlook remains highly uncertain and food and energy prices are potential upside risks to inflation. Listen in to that excerpt.
The Governing Council, therefore, today decided to raise the 3 key ECB interest rates by 25 basis points. The rate increase today reflects our assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The developments since our last meeting support our expectation that inflation will drop further over the remainder of the year, but will stay above target for an extended period. While some measures show signs of easing, underlying inflation remains high overall. Our past rate increases continue to be transmitted forcefully. Financing conditions have tightened again and are increasingly dampening demand, which is an important factor in bringing inflation back to target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to our 2% medium-term target.
All right, let's keep it with central banks then. And Turkey's central bank expects inflation to hit 58% by this year. The new forecast seemed to be more than double the 22.3% outlined in the central bank's last inflation report. Meanwhile, Bank of Japan has hinted a hawkish stance as the bank will discuss tweaking its yield curve control policy at a board meeting to let long-term interest rates rise beyond the 0.5% cap.
And shares of global chipmaker Intel jumped 7% after the company delivered profit after 2 consecutive quarters of losses. The company has also gone ahead and issued a strong guidance, expects earnings of 20% share in Q3. Now, automaker Ford raised its 2023 guidance after robust quarterly earnings boosted by pricing and demand surge.
Shifting gears then, Sony Group has sold more than 40 million PlayStation 5 consoles in its gaming division. Sony's interactive CEO Jim Ryan cited supply chain issues which took months to normalize, also added that the PS5 supply is well stocked and they're seeing pent-up demand finally being met after months of disruption. The company expects to sell 25 million PS5 units this year, which would be a record for any PlayStation device.
And market veteran Jim Rogers named silver as the top trade that he will be betting on. Listen in to what he had to say.
In fact, market has been the most surprising to me this year. We've done a very good job.
Well, I mean, I would love to say that we are the best, but if I look at what's the global equity setup, Nasdaq is also up, S&P has also participated. So yes, Indian markets are at an all-time high, but other major markets also are at a 52-week high.
Well, you just said it. Your markets are making new highs. That's very impressive to me. I would not have expected it. I would have expected that Japan would be strong this year, which is a bit of a surprise to many people, but India is the biggest surprise to me. Well done.
Why were you surprised and why were you not expecting that Indian markets will make a new high?
Well, most markets around the world have been strong, as you know, and when you're that strong, usually something happens to cause the markets to go down. I would expect the American markets to go down later this year, but anyway, I'm just surprised that India's been this strong. I did not know your economy was so strong, and I certainly did not expect your market to be so strong. Congratulations. Well done.
All right, that's the word coming in from Jim Rogers, but let's move on then. And Bollywood actor Kriti Sanon has now turned into an entrepreneur with the launch of her new brand, her D2C skincare brand called Hyphen. My colleague Kavita Thaplial caught up with Kriti Sanon, co-founder and chief customer officer, and Vaishali Gupta, who's the co-founder and chief growth officer of Hyphen, on an exclusive conversation. Listen in.
The name, I think, is very, very important for any brand, and it needs to kind of stand for what the brand does, what it says, the brand philosophy. At the same time, it needs to be catchy. It needs to be something easily spoken. And in our case, we also wanted it to be cool. So, so all of that. I remember it took us very long to find a name because we were just not getting happy with anything and everything. And I remember being on Pinterest and I was Googling beautiful words and their meanings constantly. And it was, I was just not liking anything. And we were just sharing names with each other on the group, which had no brand name to it. It just felt beautiful. It felt apt because we're hyphening nature and science. We're hyphening a lot of really good ingredients and making power pack products. We're hyphening certain steps at times, like our sunscreen also is a moisturizer come sunscreen. You know, we're hyphening multiple benefits in every product. So it just kind of felt right. And I just feel like hyphen as a philosophy to me is like you can hyphen anything to your life. You know, you can have it all. People say you can't have it all, but why not? You know, just hyphen it.
After McAfee and, you know, after it becoming such a big brand, now you are doing something with Hyphen, you know, and very nicely explained by Kriti also how it means joining two forces. And over here, it's nature and science, and it's a skincare brand. So, yeah, your thought process behind it, Vaishali, and how do you also plan to, you know, take it ahead?
Got it. So I think Hyphen is a very, very close brand to us. After M Caffeine, we figured out M Caffeine solves for a very, very unique, very different use cases. And we found certain demand gaps where we wanted to, you know, launch something very exciting, very interesting. And Hyphen, born out of that curiosity, born out of that, you know, excitement and research to launch to fulfill that particular demand gap. And I think when we met Kriti, we always love meeting people who are passionate about skincare, who love skincare, and who have an inherent quality of solving problems. And as engineers, I think that these two things wherein we had a very common passion and we were looking to solve a very strong problem, I think that is where we met Kriti and we felt that we should start this brand together. We are super excited that the brand is now launched. We can get all the products available at lets-.com. And
well, that's yet another celebrity turning entrepreneur there. Now let's quickly slip in a short break. After the break, we go domestic.
Hi there, welcome back and thanks for staying tuned to Market Cafe. Before we move on with the show, let's quickly see what the Asian markets are doing this morning. And Asian Pacific markets are painted largely in the red this morning ahead of the Bank of Japan's rate decision today. Now, Japan's central bank is expected to keep its benchmark policy rate unchanged at the negative 0.1%, but investors will be keenly watching out for any signs of a shift in stance towards its yield curve control policy. Now, with that, you've got the Nikkei. Nikkei is taking a sharp hit. It's down 1.2% in trade today. Followed by that, you also have other indices that are largely trading in the red. You've also got Hang Seng on your screen up there, trading with a loss of 0.8% right now, 160 points lower in trade. You've also got Kospi that's trading nominally in the red, 6 points down. Not much of a downtick coming in for Kospi over there, but in the red nonetheless. Followed by that, you also have Shanghai. Shanghai also as good as the Kospi, not trading largely in the red, but still with a negative bias. And lastly, you've also got the ASX 200 that is down almost 0.8% in trade, 56-point downtick coming in for the ASX 200, which is Australia's index. Also for GIFT Nifty, then GIFT Nifty is trading down 0.3%, down 64 points. Rather flat, but with a slight negative bias. So let's see how that pans out for our markets this morning, Ankita.
That's correct, Snehi, but US futures are actually in the green. So there's a mixed cues coming in there for Indian markets as well. But
all right, with that, we'll slip into a short break. But
welcome back here watching Market Cafe, and let's go on to news coming in on the domestic front. In an exclusive, FM's Nirmala Sitharaman is all set to launch the 33,000 crores backstop fund for mutual funds. Now, the initiative expected to provide liquidity to debt schemes during the periods of market stress. Let's bring in my colleague Ankur to understand what he is picking up from his sources.
Yes, the NAV of mutual funds is expected to improve further as tripartite repo in corporate debt securities is launched. What we learn is that as mutual funds will get additional avenues for fund deployment for better returns, and this is as compared to G-Secs, the higher expectation of NAV is likely to be justified. Apart from that, this new facility will enable mutual funds to finance their inventories of bond holdings through an active repo market, and till now this facility was not available. In fact, there has been trials in the past which did not yield much results, but now this tripartite repo is getting launched. The expectation of SEBI is that there will be more liquidity in corporate debt market. There is also one more debt market fund which is launched, and that is 33,000 crore backstop facility, and that is an initiative of SEBI. It was approved in the board meeting which was held earlier, and this backstop fund will be utilized to buy illiquid investment grade corporate debt during the time of stress. So this is a contingent planning. With both these initiatives, it is likely to improve the corporate debt market, and expectation is that it will have wider reach not only to banks but also to primary dealers, insurance company, and as well as mutual funds.
All right, thanks Ankur for all those details. Let's move on then. And days after announcing the demerger of its hotels business, ITC management spoke about the rationale behind the demerger decision. The company said the financial ratios will improve substantially for ITC. They also spoke on capital raising plans and reiterated that the demerger will be tax neutral. Listen in to what the management had to say.
Certainly, they will improve substantially.
The transfer into a separate company where we will have 40% stake, residual stake, as ITC will therefore really mean that it is going to be accounted for like an associate on our balance sheet. So if you look at segment ROCE, which is segment EBIT in aggregate divided by the total segment capital employed in all our operating segments, that ratio to my mind should improve by 18 to 20 percentage points. Of course, these are based on FY23 numbers. The actual numbers will obviously be struck when we get the approvals and do the actual accounting entries. But ballpark, I think 18 to 20% segment ROCE improvement is something that we should expect. Second, apart from the segment ROCE number, is the overall return on invested capital, or ROIC. That number we expect to improve by in double digits for sure. ROIC, as you know, is a post-tax. Generally, people do a post-tax ROIC, so it's no pat on the invested capital, and that ratio should improve by 10 percentage points around that double-digit kind of mark. Balance sheet is for the hotels entity on its own. It's not about accessing ITC's balance sheet, of course. When it's demerged, it's a separate entity. So if you look at the capital employed of this business in FY23, March 23, the net assets are about 6,000 crores. So that's a very good start, and there's obviously going to be no debt.
What this company will have is a very strong balance sheet, a debt-free balance sheet with very strong assets of something like a few thousand crores. And it would have the capacity to, fund the asset right strategy with the free cash flows it's generating. It has got a good free cash flows. It is doing well from a profitability perspective. But should there be need to raise capital, I think it has a strong balance sheet to go to the market, raise capital if it wishes to. It can also raise capital by way of equity or other investors who may be interested. As a broad principle, we understand that all operating investments will move along into the new entity, unless there is a very specific, in a rare case, if there is a very, there's an exception or something special is there. So that's the intention. Non-operating investments will get, they have nothing to do with the ITC hotels. So therefore they don't kind of move. So that's a broad principle with which we will be addressing these issues.
All right, moving on from ITC, a big major, to the newbies in the business. Now, well, we did see 2023 see a lot of listings happening and a lot of action coming in there on the at the primary market front, and there were a total of 11 listings that have happened year to date, and some of them have seen some killer listing that is happening. As of yesterday, we had NetWeb Technologies that listed with a premium of 88% on the bourses, over this issue price of 500 rupees. We also had Idea Forge Technology that actually saw, gains of 93% over the issue price of 672 rupees, a bumper listing, almost doubling the profits for the investors. We also had a couple of big IPOs like Utkarsh Small Finance Bank, again, that listed at a gains of 60% premium. We had Mankind Pharma, 20% gains coming in there. We also had Nexus Select, we had Digvi Ford, we have Global Surfaces. But there were two IPOs amongst the 11 IPOs that made a muted debut. That was Avalon Tech, that actually listed at its issue price of 436 rupees. So that was a muted debut for Avalon Tech. And Udesh Shivkumar Infra was the IPO that actually listed at a discount of 14.3%. So amongst all the IPOs, only two IPOs that have made a rather somber start. But besides that, we have seen some robust gains coming in for the IPOs that listed on the bourses this year. And with that, let's take a quick break. You don't go anywhere. After the break, we go stock specific.
Hi there, welcome back, and thanks for staying tuned to Market Cafe. Let's look at some sectoral specific ideas, and a couple of pharma names have been buzzing on the back of quarterly results. Remember, Nifty Pharma was the biggest sectoral gainer yesterday also, on the back of Cipla and Dr. Reddy's both posting very good Q1 numbers. So let's hear out from the managements of Cipla as well as Dr. Reddy's on what they had to say.
I think the supply-demand side of the equation is readjusting or rebalancing. As a result of which the pricing pressure has moderated a bit. Going forward, I think, over the real impact of this moderation will probably be felt more in the next 6 to 9 months.
Price situation is primarily of how much competition comes to your portfolio at a given time, and what is the price that companies are offering. This specific quarter, we saw a moderation of that, unrelated to the drug shortages. So we have a very positive outlook. We believe that we'll continue to perform in the same manner. This year we have lenalidomide, we have a main asset acquisitions, we have a growth and market share gain on base business, and we do have 30 launches. So launches are still important lever for us. And all of these components will grow us in the US this year.
And moving on to the biggest earning movers, Tech Mahindra and Shree Cement lay out their growth roadmap in exclusive interviews with ET Now. Listen in.
I think because of certain uncertainties in the market or certain sectorial uncertainties, now it is plus minus 2 quarters. So, I mean, I would still say that I think the value proposition of cost transformation, value proposition of technology transformation, value proposition of business transformation is very strong, and hence I would consider this as a temporary blip in terms of large deal performance, but overall confident that it will come back.
At least a double-digit growth is what we would expect going forward in the year. We have reasons to believe that while there will be a cost parity on many topics, but still there will be areas where Shree Cement will be able to manage operations more efficiently and remain the cost leader. What I see is a very strong cash flow, so even an amount of debt does not really create additional risk for us.
So that's the word coming in from the managements of Tech Mahindra and Shree Cement on their Q1 numbers. But let's get a move on then, and we have Lisa standing by to tell us and take us through a list of all the stocks that you should be keeping on your radar this morning. Lisa, take it away.
Well, it's earnings season, so let's start with the earnings first. Starting with Bharat Electronics Limited, good earnings coming from that counter. The revenue was up 12.5%, while the EBITDA growth was higher than revenue, which flew into the margin. The margin saw an expansion of 19% versus 16% seen last year. Moving on to Sona BLW, the auto ancillary company, also reported a decent set of earnings. The revenue was up 25%, EBITDA was also higher at 47%, and that flew into the margin, which saw an expansion of 27% versus 23% seen last year. Indian Hotel also reported good revenue growth of 15.8%. Margin also was steady at 28%. JK Lakshmi Cement's revenue, that was quite muted at 4.6% on year-on-year basis. The margin saw a contraction of 11.3% versus 15.5% seen last year, and even the net profit, that was also down at 29% on year-on-year basis. Now moving on to some corporate announcements, Lupin announced that it has received correspondence from US FDA that it has now addressed the concern raised in the warning letter for its facilities in Goa as well as Pitambur facilities. Piramal Pharma has announced that it will be raising a right issue. It will be raising funds via right issue. The right issue price is at 81 per share. The entitlement ratio is 5 shares for every 46 shares held, and the right issue size is at 1,050 crore. And lastly, chemical companies also will be in focus because the government is planning to bring a PLI scheme for basic chemicals. So it's a challenging year for chemicals. So this is like a ray of hope for the chemical companies, and the size of PLI scheme, as per sources, it will be in the range of 9 to 10,000 crore. So keep a watch on chemical companies too. So these are all the stocks that investors have to keep an eye on today.
Thank you so much, Lisa, for that. We will be tracking all the stocks very closely, but some more stocks to keep on our radar. Vamakshi is here with all the brokerage notes that came in this morning. Vamakshi, tell us, what are the brokerage notes saying then?
Well, yes, let me first start off with Laurus Labs. We have a note coming in from Jefferies, and they have highlighted that the company has missed estimates for the 4th consecutive quarter, with EBITDA margins coming in at a multi-quarter low of 14%. They witnessed lower offtake in ARV formulations, and the transitory shipment impact was seen in the non-ARV APIs. The CDMO performance for Laurus Labs was quite weak, and in fact, they believe that Laurus may not have more products to fill the void that was left by Paxlovid. So all in all, a weak set of numbers, and that is the reason why Jefferies has maintained its underperform rating. Target price of 250 is what they've given. Other than that, we also have Nestle in focus. Now keep in mind that the company reported its Q2 calendar year 2023 results, and brokerages are largely saying, especially Jefferies is saying, that the volume miss was partly offset by the margin expansion. Revenue growth was broad-based across cities as well as towns and also product segments. They do believe that the valuations are, however, quite expensive. All in all, we're seeing Macquarie has maintained a neutral rating on Nestle, given a target price of 1,998, while Morgan Stanley has maintained its underweight call with a target price of 1,650 odd rupees. And lastly, keep an eye out on Bharti Airtel. Now keep in mind that Airtel Africa reported its earnings yesterday, and we have a note coming in from CLSA. CLSA believes that the first quarterly performance of Africa was the revenue growth was ahead of estimates, but the company has reported a loss mainly due to Nigerian Naira devaluation. All in all, CLSA has maintained a buy on Airtel, given a target price of 1,030 rupees per share.
All right, Vamakshi, thanks for all those details. But stand by with us then, because Indian hotels as well as Macrotech developers released their Q1 numbers today. So break down these numbers for us and tell us how the numbers were, Vamakshi.
Well, yes, let me first start off with Macrotech developers. A mixed set of numbers is what the company has reported. Let me first look at the pre-sales number. Now, the pre-sales were the best ever pre-sales that the company has reported. An uptick of almost 17% on a year-on-year basis is what we're seeing. And this growth is mainly driven nearly by 27% growth in volumes, while realization has declined by 8%. Other than that, when we look at the collection, that has seen a bit of a decline, and that was mainly on account of lower completion as well as launches. Now let me take you through some of the headline numbers. Revenue did see a dip of almost 39% on account of the revenue recognition practices that are in place in real estate companies. And EBITDA was also nearly 29% lower, while the margins, important to note, have improved by almost 300 basis points from 17.4% to 20.4%. So all in all, it looks like a mixed set from Macrotech developers. Moving on to Indian hotels. Now the company has definitely reported good growth, but this is largely in line with what the street was anticipating. Operating performance was in line with the estimates. We did see the revenue perk up by almost 16% on a year-on-year basis. Net profit, however, has come in much higher, 31% on account of that operating leverage that we did see play out. Margins, however, have seen a slight bit of a contraction from 29.9% to 28%. Other than that, the company also announced that they will be acquiring 100% equity of Pamodzi Hotels PLC from Tata International Singapore PTA. So all in all, these were all the results that came in from Macrotech as well as IHCL, and that is the reason you should watch out for these counters.
All right. Thank you so much for joining in, Vamakshi. We will be tracking all these counters very closely. But moving on to another one, Coromandel, that reported its quarter numbers, and Coromandel International's performance is something that, you know, they gave a beat on the EBITDA, and we did see EBITDA grew by 3% on a year-on-year basis. And my colleague Lisa is joining in with more details on that. So, Lisa, tell us, how did Coromandel really fare?
Right, Ankita. So Coromandel International, they reported good set of earnings. It was an EBITDA beat for Coromandel International. Now talking about the numbers, revenue, that was muted on year-on-year basis, but on quarter-on-quarter basis, it was up 4%. But what was a highlight was the EBITDA that grew 82% on sequential basis and 4% on year-on-year basis. And the EBITDA beat was mainly driven by the fertilizer business, while the crop protection business, that was a bit subdued, and it was on expected lines because of erratic rainfall as well as the higher inventory level. Talking about the fertilizer segment, the margin was largely flattish year-on-year and stood at 7,300 per ton, and it was on expected M2M inventory adjustments. Now, Axis Capital has come out with a note on the stock, and they have a buy rating at an SOTP target price of around 1,170 per share. And the management also highlighted the given outlook, good outlook going forward. They said that with the improved coverage of southwest monsoon across India, they expect that the agri inputs consumption that will improve going forward from Q2 onwards. Well, the con call is scheduled at 2:30 p.m. and we will update you on that.
All right, Lisa, thanks for taking us through those numbers. But with that, it's a wrap on this edition of Market Cafe. Wishing all our viewers a very happy Friday and a good weekend ahead. It's a goodbye from me and Ankita. But don't go anywhere, as the market will take all the action ahead.